Make no mistake, 2017 is the dollar year, once again.
So Jose, today we'll be taking a look at some of the biggest and most influential market moves of 2016. So starting off, we have to note China's Black Monday, which was on January. Now, what was the impact on the stock and the currency markets after this event? How did it affect the rest of the year's performance for these pairs?
I think one of the first things we have to look back is the opportunities, more like sort of short-term disasters that we experience on every correction, or whatever is the nickname we want to have on these black swans, is the disguised opportunity. Most of the losses during the first 3 months of the year were already recovered. At the same time, there's not much to celebrate of. Very fast and interesting recovery. What I'm looking forward for, not only China, but equity exchanges in Asia, is how they're going to be affected as soon as Trump is pretty much in power. I mean, there's a lot of changes and pre-trades that are taking place, but the most important will be to follow those companies that are really correlated with their sales in the Western societies. And on top of that, I will think that there will be some major opportunities going into 2017 as the recoveries in these equity exchanges haven't been as good as the ones in similars like the S&P 500, say the FTSE, for example. So that will be, I think, going into 2017. There is a tremendous opportunity to allocate, be very efficient in capital allocation in some of these exchanges, but always considering how things are going to look now that we are in the face of a new business climate.
You're absolutely right. And you mentioned Donald Trump there. So before we look at Donald Trump, we'll move forward to summer of 2016, which was Brexit and the UK referendum. So due to this, the sterling was the worst performing G10 currency of 2016. So with 2017 being a prominent year for Brexit decisions, how has the market reacted? And was this market turbulence that we really did see in summer, was this justified?
In a way, it was justified, but again, this is the situation where you encounter opportunity when when others think there is a real damage. First of all, it has been convenient for the UK. I will just focus on England, as they were actually the ones that voted the yes, we went out. The first thing in that sense is the currency devaluation, because then you have the reverse trade. You're short the currency, but you're long the stock exchange, the FTSE, for example. The most important is the capital inflows. As people think that Brexit has been a rebellion from one side to the other, I think it has been a good opportunity. For sure, you're going to experience short-term bleeding, and people will be satisfied, and everyone has been looking to see who's going to replace London as the finance capital that it is. But rest assured, no one is going to replace them. The most important that London will keep their hegemony, and more capital from Middle East, China, and even Russia will be coming into a very affordable pound. Now, having said this, when we're looking into 2017, at least myself, I'm looking for a trend range below 120. I will probably say confident enough 117 to 109 if it happens. But I'm bullish. I'm bullish London pretty much, as we already have the sound of independence by the Scottish. So that's something to consider. Very, very bullish the pound, very bearish the euro in these instances. And one thing we have to consider, that now that the UK is out of the table as far as budget, already Denmark is suggesting that they should cut the budget, because when things go sour again, when things go bad as far as Italy and Greece, you actually lost a big brother that is not longer offering his wallet to support their lazy siblings. if you want to put it that way.
You can put it that way, that's absolutely fine. So we can't talk about 2016 without talking about the US presidential elections and the Trump presidency. So I think the big question is, how did investors react to a Trump presidency? Because this US election, it doesn't just involve the dollar, it affects almost every other currency that is traded.
I think you have to divide this in two sections. You have the institutional traders, and then you have the Main Street. Main Street got fooled once again based on polls. And this trade, the pre-Trump trade wasn't different from the pre-Brexit trade. 1-2 weeks before Brexit, we got a poll where everything seems okay. We are staying. A couple hours later, the pound is 2,000 points down. Then if you look at the same situation, it looks like Hillary is winning, and then suddenly, as Trump is about to win at Florida, you have all hell is breaking loose, and everyone thinks it's the worst decision ever. But in fact, this guy is coming with a lot of positive things, at least in the short, medium term for the U.S. Not so good for partners that have been abusive of the equation, in this case, China, maybe a little bit Russia. So Main Street thinks at the very beginning that it's bad, just judging the book by the cover, but not going deep into what is happening. Now you have a Ray Dalio from Bridgewaters, you have Bill Ackman, prominent figures in the hedge fund industry, just changing their ideas about what's going to happen in 2017. Of course, Main Street now is reacting. Maybe it's too late. Maybe we'll have a correction. Equity markets, which is something everyone is expecting after a increment in the interest rates by the Fed. But a combination of situations are still in favor or a very bullish U.S. economy. Something to consider in the next 24 months, not only 2017, but beyond 2018, is how to align and position capital. And I mentioned this at the beginning of the interview. You got to be very efficient with your capital because opportunities are very, very pricey. But make no mistake, 2017 is the dollar year, once again.
Well, thank you so much for your thoughts today, and I'm sure that we'll catch up in 2017 for some more of your insights.
Thank you.
Well, that's all from us here in the Geneva studios, but if you did like this interview, then please do like and comment on dukascopy.tv.